everyone, good evening and welcome to the Money Show right here on ET Now. I'm Avan Dabash. This is the only show of its kind that gets you market's top personal finance experts to answer all your questions. It's all focused on mutual funds, so if you have any queries, do reach out to us. We have a number that's going to flash at the top and the bottom of your screens. Feel free to pick up the phone and dial in or simply email us on the Money Show at etnow.tv. Joining in on the show today, we have Uday Dhoot, co-founder at Venn joining in from Bangalore. We're great to have you on board with us, Uday. Let's begin with the first question then and just talk a little bit about the importance of life insurance. Take us through why it is absolutely, essential that every person avail of a term insurance plan, and if you can just break it down as to how easy it is to go about it.
All right, perfect. So when we talk about life insurance, and I believe pretty much everyone today has some kind of life insurance or the other, and when we ask people saying that, hey, how much life insurance do you have? Pretty much the answer that we get from most people is the amount of premium that they are paying. Now, one thing very important here to understand is that when you're talking about life insurance, you should be concerned about what is the sum assured, what is the cost of your life that is being covered, and it's very important. Please realize that from an economics perspective, we are essentially human beings are money making machines, and we need to make sure that this gets appropriately covered. Now, how do we do that is that we need to ask ourselves a few set of questions. Do we have any form of liabilities? It could be a home loan, it could be a business loan, it could be a personal loan, and do we want to make sure that if something happens to us, these liabilities do not fall on our dependents? So we need to make sure that if we say yes to this, or is there somebody who is dependent on our regular income to provide for their regular expenses? So that's the other person. Or if we have any goals which are so critical that irrespective of what happens to us, we want to make sure that, hey, this school that you want to come up, or this kids education that you want to see happening, this happens forever. If you answer yes to any of these three criteria, then you should have appropriate amount of life insurance. Now, how do you think about it? So essentially, you can break your life insurance requirement into three different buckets. You have a liability protection bucket, you have an expense protection bucket, and you have a goal protection bucket. In the liability protection, what you essentially do is that whatever liabilities you take on, you make sure that you have similar amounts of cover, so that if something happens to you, the insurance company takes care of the loan company, your dependents never get any kind of liabilities on their head. So essentially, people who are taking home loans, please make sure that if you have taken a 30 lakh rupees home loan, you have at least a 30-40 lakh rupees life cover, so that your family is always free of any kind of debt. So that's the first bucket. The second bucket is the expense protection bucket. Here essentially what we are trying to achieve is that to make sure that, hey, my family gets the regular kind of income that I was providing them in my absence. The way to think about that is that what is the regular monthly expense for my family? How can I provide for that for the next 10 years? So let's say if it is say 10 lakh rupees in a year, around say 1.5–2 crores for the next 10 years, or it could be a higher amount. And once you do that calculation, you know that, hey, I need to have so much amount of life cover for myself. You would have already built some savings. If you have, say, I have already got 20 lakh rupees of savings, from that 1 crore, remove the 20 lakh rupees, the remaining 80 lakhs is what you need to have as life insurance. So that's the second piece. The third piece is the goal protection. So let's say I want to provide for my daughter's education, foreign education, 15 years down the line, I want to save 1 crore. Till the timing I am there, I am doing my SIPs, I am putting the money in these long-term investments to grow there. But if something happens to me, I still want to make sure that she has that 1 crore when she is 21 years old. So how do I do that? I make sure that I do the regular savings, but I also have the life insurance. So these are the three buckets that you need to keep in mind: liability protection, expense protection, and the goal protection. Once you have done that, you think that, okay, I need to buy a total sum assured of say 2 crore rupees. Then the best way to do that is essentially buy term insurance.
Right.
A term insurance is a very simple product, just covers your life and nothing else, does not give you anything in return.
Okay, there you have it. Loan bucket, expense bucket, and goals bucket, and that's how easy it is. Term life insurance is the need of the hour. Do remember, Uday Dhoot is with us. If you have any questions or queries, there's a number flashing at the top and the bottom of your screens. Call us and we will help you out with your portfolio and your selection of mutual funds. Well, let's take our first email query from Girish Vyas. He's emailed us on the Money Show at etnow.tv. He says, I'm due to retire over the next 2 years. I changed my job in early 2018. I have accumulated a PF of around 15 lakhs in a non-operative account. I have two questions. Should I close the PF account, which is dormant but earning 8.5%, and invest the proceeds in mutual funds instead? And the next question is it a good time to put the above lump sum in mutual funds at this juncture? If so, he asks, which are the kind of funds that I can look at? What would be your response to this? Would, the obvious choice be to start investing in mutual funds, or do you think that you would need a better idea of his goals and risk appetite?
Avan, here we have very limited information in the background of Mr. Girish, so we don't know what is the other part of his portfolio. So essentially we are kind of blindfolded in terms of telling him what exactly he should be doing with the lump sum. So if he is hearing us today, what I want him to really think about first is that before you go to that 15 lakh rupees non-operative PF account decision, is think about your retirement. What is it that you need from a monthly basis? And if you were to retire 2 years from now, imagine what will happen, say another 10-20 years. So life expectancy could be anything between say 15 to 30 years. So you do have a long-term horizon of good say 20 odd years that you need to plan for. And how do you need these investments? So once you have thought through that, then you know that okay, I need to have say 100 rupees or whatever, 1 crore, 2 crore, whatever is that corpus, and I need to have so much equity allocation, so much debt allocation. Then start thinking, saying that hey, within the debt allocation I have some money already in PF. Is that the best place for the debt money to be, or should I be moving it actually to equity because I need a higher equity allocation? So basically the first point that I want to highlight to him is that he needs to look at his overall retirement planning. Then start asking a question to himself, so what should be his asset allocation? If his asset allocation needs to change from equity to debt, then we can figure out whether mutual fund is the right product to do it, or if he needs to stay in debt, whether PF is the right product or no. So those are my questions to the first point. So basically he really needs to think about his planning process here. The second piece, and this is a common question that we get from a lot of people when they're investing in mutual funds, saying that hey, whether I should be doing lump sum or whether I should be doing monthly transfers or systematic investments. The way to answer that question is that think about first what is your asset allocation and where you want to invest. Typically if you want to invest in debt funds, you could actually go ahead and do lump sum investments. You don't have to necessarily always keep doing those systematic transfers. Systematic transfers are essentially good for people who have say wanting to invest in equity market or who are having regular savings. That's a good way to sort of build a habit of savings. But if let's say I have say 10 lakh rupees or 15 lakh rupees today and I want to invest it in debt funds, I should just go ahead and do it. But if when it comes to equities, I might want to keep it in liquid and do a regular transfer to equity funds so that I average out my buying price. So it depends on whether you're doing equity or debt. So that's how you need to think about lump sum. The other piece is that what is your current allocation of assets and what is your desired allocation of assets. For somebody who's never invested in equities and first time is wanting to invest in equities, we can obviously start with slightly more aggressive investing in equities and then stagger the approach. But somebody who already has enough in equity and he gets fresh investments, maybe we want to stagger that. So that's the other thing that you want to look at. The third thing is typically what is the size of the funds that is available as compared to the overall size of the portfolio. So these are 2-3 things that you want to think about before you decide whether you want to do lump sum or you want to do a systematic transfer kind of a thing.
All right, that's the view coming in as to how you should be looking at that with respect to your PF and the investments overall. Let's move on. We have a live caller with us, and do remember, if you have any questions as well, you can connect. Mr. M.G. Akolkar is with us from Gujarat. Hi there, sir. Welcome to the Money Show. Good evening. What's your question?
Yes, very good evening, madam.
What's your query?
Hello. My query is that I am now senior citizen.
Okay.
And now I want to invest about 20 to 25 lakhs rupees. So therefore, whether I want to invest in the mutual fund, direct in the growth system, or in the STP, or in the liquid fund, or which way I have to invest the money. So therefore, at least 5 to 10 years, I did not want to touch this money.
Understood.
And in that way, I am a such time long-term investor for this money.
Okay, so basically the intent is there. He's got a sum of 20 to 25 lakhs long term, just wants to put his money in the right avenue and not look at it. What's the best way, and if you can recommend some funds?
Mr. Akolkar, this money after 5 to 10 years, what do you need this money for? And have you ever invested in equities before?
I have already invested in equity mutual funds and etc. previously, and I have get too much better results with the funds also, because I have selected the mutual funds
Okay.
from their record, that which mutual funds are better, good and better.
Okay, and what do you need the money for? What's the goal?
After now I am a senior citizen. Only my daughter is with me, and nearby about she will be married.
Okay.
After that, at present I am a pensioner now, because I am getting the family pension for my wife.
Okay, so basically for your retirement plans, for your daughter's marriage, wealth creation, that's what he needs it for. And as he specified, he's already a senior citizen. Uday.
So essentially the way I would think about it is that he already has some experience of investing in equities. I think he needs this money after 5 to 10 years. He's getting some regular pension. These are my assumptions, and he does not really need it for his regular expenses. I would say that if he has like a 5 to 10 year horizon, I think he should go at least with a good 50-50 sort of an equity debt kind of a portfolio. Some of the money can go into equity funds and some of the money can go into debt funds. The debt funds can go in one lump sum at one go, and this could be the money that 3 years later or 4 years later he can utilize for his daughter's wedding or for daughter's any other requirements that he may have, and the remaining money can just stay there and accumulate and basically compound his wealth essentially, and sort of be available to him when he sort of really needs it. And the funds that I would recommend him on the debt side would be, say, ICICI Prudential Credit Risk Fund is something that he could look at, and Franklin Templeton Short-Term Income Plan. These are on the debt fund side that he can look at. On the equity side, I would recommend him to invest in multi-cap funds. So he can essentially look at, say, an HDFC equity fund. He could look at a Motilal Oswal M35 multi-cap 35 fund. These are funds that he can look at, and there I would suggest him to move the money into liquid funds right now and do a systematic transfer plan over the course of next 12 months into these equity funds, and that would what I would recommend him to do.
All right, that's the view coming in, and I hope we got your query comprehensively answered with respect to the funds that you can look at and how you should allocate your money. If you want more clarity, please email us on themoneyshow@etnow.tv. Let's take a quick break. Coming right up, on the other side, we're taking on board Jan Nivesh questions, your live calls, as well as a fund review. Don't go anywhere.
रोजगार मध्य प्रदेश का लोकल हो, तो उसके लिए निवेश नीति में परिवर्तन करना पड़ेगा। मैं करूंगा, मैंने वो साइन कर दिया। पूरी बात हो जाएगी। आप देखिए, आप कह रहे थे कैबिनेट का, आज के दिन मैं ही कैबिनेट हूँ, कोई और मंत्रिमंडल तो है नहीं। तो ये दूसरा काम था। तीसरा काम था कि जहां हमने कहा था कि विवाह के लिए हम 51,000 रुपए देंगे, ये हमने इसको लागू किया। मैंने कहा कि हम 4 गारमेंट पार्क को एस्टैब्लिश करेंगे। 4 गारमेंट पार्क हम मध्य प्रदेश में खोलेंगे। इस गारमेंट पार्क में केवल रोजगार ही नहीं, पर जो संबंधित रोजगार होता है, कोई उस काम से संबंधित काम कर लेगा, कोई ट्रक चला लेगा, कोई पैकिंग का काम कर लेगा, कोई दूसरा काम कर लेगा। हमें याद रखना है कि जब भी उद्योग खुलते हैं, कोई भी नया उद्योग खुलता है, उसमें जिनको रोजगार मिल गया वो तो अपनी जगह है, पर उसके साथ जो संबंधित रोजगार होता है, व्यवसाय के मौके बनते हैं। कोई होटल चला लेता है, ये संबंधित, कोई अपनी गाड़ी किराए पर दे देता है, कोई पैकिंग का काम कर लेता है। ये संबंधित विकास से हमारी आर्थिक गतिविधि बनती है, और आज मध्य प्रदेश को आवश्यकता है कि हम आर्थिक गतिविधि, इकोनॉमिक एक्टिविटी जिसको कहते हैं, ये जीडीपी अपनी तरफ है। जीडीपी का ट्रांसलेशन क्या है इसमें मैं नहीं जाना चाहता, पर कि आर्थिक गतिविधि बने, लोगों को व्यवसाय का, रोजगार का, खुद काम करने का, खुद कुछ काम खोलने का मौका मिले। ये मैंने निर्णय किए। मैंने अधिकारियों से चर्चा करी है, अधिकारियों को मैंने संबोधित किया। मैंने कहा कि देश में बहुत बड़ा परिवर्तन हुआ है, मध्य प्रदेश में बहुत बड़ा परिवर्तन हुआ है। मैं तो आपसे ये प्रश्न पूछना चाहता हूं कि आप में वो परिवर्तन हुआ है? सालों से वही व्यवस्था चल रही है। आज केवल नीति या नियम में परिवर्तन की आवश्यकता नहीं, आज तो व्यवस्था में परिवर्तन की आवश्यकता है। कि एक जमाना था जहां इंटरनेट नहीं था, एक था जहां कंप्यूटर नहीं था, और बहुत सारी ऐसी परंपराएं जो चल रही हैं, हम कैसे इसे नए नजरिए से देख सकते हैं? हमें अपने आप में ये संशोधन करना पड़ेगा, अपने आप में ये सोच बदलनी पड़ेगी कि कैसे आज के नौजवानों की जो आशाएं और अपेक्षाएं हैं, आज के नौजवान और बुजुर्गों के जमाने का जमाना कुछ और था। बुजुर्गों ने तो जीवन काट दिया बिना इंटरनेट के, बिना ये 1000 चैनल के। आज के नौजवान में जो तड़फ है, क्या आप पहचान सकते हैं? ये आज तड़फ हमें पहचाननी है, क्योंकि ये मैं मानता हूं बहुत बड़ी चुनौती यही नौजवान मध्य प्रदेश का निर्माण भविष्य में करेंगे।
All right, and as he's been sworn in as the Chief Minister, that is Kamal Nath speaking, talking about the overall outlook and the plans going forward for Madhya Pradesh, hitting the ground running, if you will. Well, let's get right back to the Money Show. We're in conversation with Uday Dhoot, answering your personal finance queries. Our phone lines are open. If you have questions, please dial in or email us on themoneyshow@etnow.tv. It's time for the fund review, and today it's the HDFC Mid-Cap Opportunities Fund that we're discussing. With an expense of nearly 1.8%, this has stocks like Balkrishna Industries, Cholamandalam, and in the last 1 year has lost out 7.8%. Let's start off with there by getting a sense as to what is your rating on 10 and what is the outlook on this fund.
HDFC Mid-Cap Fund has been one of the best performing mid-cap funds out there. Over a period of time, it has sort of grown. From a rating perspective, I would like to give it full rating, but I would say 8. The reason I'm saying this 8 is that for people who are invested in this fund, you can stay invested. But for newcomers who are looking at the performance of this fund and thinking that it might be able to repeat the same kind of outperformance coming, might be slightly difficult. So basically, to that extent, you need to sort of balance your sort of hopes around that. I think the other thing that has happened is that because the fund has been so successful over a period of time, its size has sort of continuously gone up, and given that it's a mid-cap focused fund, you might find it a bit challenging now to maneuver its positions. So within that same stable, you might have other funds that you could look at from the HDFC fund stable itself. But for this fund, for people who are invested in this fund, you should stay invested. For people who are looking at investing in this fund, you might have to just recalibrate your expectations from the fund, given that it has done phenomenally well over the course of last a few years, and it may not repeat the same kind of outperformance going forward.
All right, that's the take coming in. Although it has performed well, although there's a rating of 8 on 10, you don't know if this kind of performance can continue, but nonetheless, an optimistic view. Well, do remember we have Jan Nivesh, our on-ground investor education initiative, where we're having you pledge at least 1 day's salary in mutual funds. And we've got some queries from our on-ground Jan Nivesh event. Mukul has sent us a query and he says, everyone wants to know about mutual funds, yet people only invest in fixed deposit plans in India. What are the advantages of mutual funds over fixed deposit? Can we completely trust them? And I'm so glad we're taking a question such as this, because I think this really goes to show that even though we're harping on about mutual funds, and yes, there is a massive conviction in equities and mutual funds by investors, there are a lot of people out there who are completely wary of mutual funds and have even asked a question like, can we completely trust them? How do we change the mindset? I mean, we are doing things like initiatives and educating investors, but what would you like to tell Mukul there?
See, there are a few things here that I would like to say. I would, and I'm assuming these are really first-time investors from people who have small savings, not very large savings, who never experienced something which is linked to the market, whether equity or fixed income, where there are daily pricing and NAVs. Is that it is not that FD versus mutual fund. It's like dal and rice or roti and sabji. You need both of them to work together. So it's not that one is better than the other and just do this and don't do this, right? It is a lot about your own comfort, your own experience, your own ideas of what you have done. What I would like to tell people who are investing in the mutual funds for the first time is, let's say if you have 100 rupees today which is invested in fixed deposit, take out 5 rupees or 10 rupees from there, and let's just say you want a safe mutual fund, then do like a liquid fund or a debt short-term income fund. See that for 6 months, see that for 1 year. As you see that, as you learn about it, ask more questions to your advisor, try to understand this better. As your learning improves, your experience comes in through, then start deploying, saying that hey, I would like to do larger money there. So don't sort of, just because somebody told you saying that mutual funds are better or this is better than the other, take all your money from here to put it there. You yourself study, take some small portion, diversify yourself, start with it, see it for 6 months, 1 year. As it works, it will work for you. And why I am saying this is important is that our investing careers are not going to be about 6 months and 1 year. Our investing careers, if really we want to have a successful financial life, is about our decisions over next 10, 20, 30, 40 years, which means that you have a really long-term horizon if you want to think about yourself, saying that hey, I'm learning about how to manage my money better. So start taking those small steps, and then that's how you would sort of learn and improve your sort of learning. Typically, when you're looking at any financial product, ask yourself these very basic questions. What is the risk here? What is the return that I can expect? Is this liquid enough if I need the money? Will I get the money in 6 months time, 1 year time, 3 years time, 5 years time, and accordingly plan your investments. Match that with your own time horizon. How much time do you have in your hands? Do you have 3 months, 6 months, 1 year, 10 years? And then accordingly make sure that you match the investments. Look at what is the taxation of this investments versus the taxation of other investments that you are looking at. What are going to be the post-tax returns for you? So those are things that you need to do. Finally, whenever you choose any financial product, think about what goal or final objective you want to achieve. Your products and investments should be targeted towards that. So don't try to think about which product is good. Always try to think what is important for me and which product helps me to achieve those goals and objectives, and do that.
Okay, Uday, let's squeeze in our last Jannivesh question. Palas Banerjee says, kindly explain the tax implication on returns under growth and dividend options. A quick response.
So very quickly, basically in a growth fund, all your return comes in the form of capital gains. In a dividend option that you have, your returns will come in a mix of capital appreciation and dividend income. So those are first important things. When you talk about capital gains taxation, essentially mutual funds will have two types of funds: equity mutual funds and debt mutual funds. Equity mutual funds, which are invested for a period of less than 12 months, are short-term capital gains. More than 12 months are long-term capital gains. So 15% for short-term capital gains and 10% for long-term capital gains. When you're investing in debt mutual funds, up to a period of 36 months, if you have come out before 36 months, it is short-term capital gains, taxed as per your tax bracket. If it is more than 36 months, it is long-term capital gains and taxed with indexation benefit at 10% or 20%, depending on whether you use indexation or you don't use indexation there.
Okay, there you have it. That's the outlook coming in with respect to growth versus dividend option. Uday, thank you for joining us. Please keep your questions coming on The Money Show at etnow.tv. We'll catch you same time tomorrow.